Today, we're discussing something that affects more entrepreneurs than people realize: the gap between success and financial qualifications. Many entrepreneurs may have thriving businesses, strong cash flow, assets, and influence, yet still struggle to secure financing in the traditional way. Why is that? Today, we have mortgage specialist and founder of Kanga Mortgages, Dion Beg, one of our newest PWT mentor experts. And of course, we have Youssef Skalli from Scalability Coaching, our working coach, coming to us from Ottawa, who also specializes on executive mobility, which affects what we're going to be talking about. Welcome, gentlemen.
Thank you.
Thank you.
Dion, my goodness. You both bring your expertise in executive mobility and mortgages for entrepreneurs. Tell us, why is it that the current financial and banking systems are so archaic at not realizing the current emergence of the digital entrepreneur, the consultant? Why are we hanging on to such draconian, you know, concepts?
Yeah, sure. So first, let me start by saying I do not agree with the way that the institutions approach this, but at the same time, my job is to help clients navigate, through the maze that is the financial guidelines and rules, and make sure that they come out the other side successful. To answer your question as to why is it that that people or institutions treat regular salaried employees as superior on a mortgage application in many cases compared to, say, self-employed individuals who don't show traditional income, there's probably a couple of reasons. Okay, if I just go to the statistics, if we look at financial failures and or bankruptcies, the reality is that, and we probably all know this, most self-employed business owners don't survive their first 5 years in business. Okay,
Oh,
it's a
wow.
sad fact. And so because banks can't ignore that type of statistic, they're generally looking for more history from finance or income from a self-employed person than they would of a regular employee. And yes, the because of those business failures, people do file for consumer proposal or bankruptcy, some kind of insolvency, more so in the world of self-employed than in employment. Now, on the flip side, I want to say that my most successful, wealthiest clients are all business owners, without exception. Okay,
Yeah.
but again, the banks have to balance risk. They're accountable to their shareholders, and this is probably the key reason why self-employed people are treated a little bit more harshly at the
But
lender
the
level.
irony, the irony of it is that those same self-employed people, because most businesses in Canada, because both Yusuf and I are new Canadians. Mine, I'm a little bit of an older new Canadian than Yusuf, but in Canada, most employment comes from SMEs, from small medium enterprise. So I, as a small business owner, self-employed, could be hiring someone, right, to assist me in my business. They get a T4 and they can way more easily get financing and get a mortgage and get recognized for their credit worthiness than the person that is
Yes,
facilitating that
correct. And the
employment.
irony is not lost on me in that it is easier for sometimes it's easier for my employees to get a mortgage than it is for me to get a mortgage when it comes to the amount of documentation required to qualify for that mortgage.
That
Yeah.
is insane. Yusuf, you're a citizen of the world. Has that been your experience in Europe and in the other countries you have resided?
Yes, absolutely. And I would even say that I have seen in Europe, much less in West Asia, but in Europe, I have seen more stricter risk analysis when it comes to self-employed than in West Asia, where it was a bit lighter, but still it's the same challenge. But just following up on what you said, Dion, really interested from your experience to know what are the common misconceptions that financial institutions, in your opinion, and lenders, in your opinions, have about self-employed professionals?
Yeah, so the thing is that with the financial world as it relates to income documentation, the challenge is this: a self-employed person, and I'm just going to use some round numbers just for some context. Let's say your business generates $500,000 a year. You have some standard expenses, and you pay yourself, but you might only pay yourself 50,000. Okay, and because you have a good financial planner and tax planner, you might keep a bunch of your money inside your corporation, which is totally legal and very logical. But because that income doesn't hit your own personal income
That's right.
line,
Yeah.
then they are going to ignore that, right? And if I was to take this to the government level, beyond the institutions, many years ago, Canadian banks were actually a little bit more welcoming to the idea that, okay, we understand you pay yourself only 50,000, but we see that your business makes 200,000, and we're going to actually just sort of include that in your numbers. Now, a couple of years ago, the Canadian government came out and said to the banks, if you are lending to self-employed people, they must prove that on their personal tax return, they can sustain this income, or this debt.
At the
Okay,
personal level,
on
not
the
at the
personal.
business
Now,
level.
if you go one more layer deep, this is what the government is saying. If you are lending money to business people, those business people must be declaring more income and therefore paying more income tax in order to get the types of funding that their employees are getting. And so it's a way for the Canadian government to sort of push Canadian business owners
To
to declare
declare
more
all the
income and
income.
pay more income to the Canadian CRA.
Crazy. And just you made an important distinction, because not all self-employed, not all business owners are created equal. There's merchants, like brick and mortar businesses. There are digital entrepreneurs, which the three of us happen to proudly claim. Then there are, freelancers. Then there's contract, employees and such. Is there a difference, or realtors for that matter,
Mhm.
or
Yep,
like licensed professional corporations, right? Is there a difference between each of the segments, how they get viewed and treated by the tier one? And I do want to speak of all the different ways that you can
certainly.
get financing, but let's assume tier one banks, the cleanest, cheapest way to do transactions.
Yes.
Is there a difference between the different type of enterprises?
Okay, that's a great question. I'm going to give you a simple answer, and the answer is no. Okay, but let me dive a little deeper into this. So, the pure definition of figuring out if whether or not you're self-employed or an employee. Okay, the question is, who pays your federal income tax? Okay, is that burden on you to pay the federal income tax, or is that federal income tax withheld by the company you work for and paid on your behalf and taken off your paycheck before your net income hits you? Okay, so that is the simple definition. And so for that reason, people who are consultants, who are commission-based salespeople, who are digital nomads, who run an online store or whatever the case may be, they are collecting gross income, and then when they pay themselves, they then have to pay their own income tax directly to, in this case, the CRA. So that is the definition of self-employed. Who pays your tax? If you pay your own income tax, then you are self-employed.
Okay. In between corporations and, say, entrepreneurship, right? Which is, one is incorporated, which in my book, you're paying tax twice, because you're paying tax as a corporation and then you're paying tax at the income level when you pay yourself, right? Opposite to just being self employed and having not being incorporated, which you're only
Yes.
paying tax sort of once. Am I reading this right?
Yes and no. So firstly, let me say that we have lots of self-employed people who have corporations, and which
Mhm.
means that you have articles of incorporation, and you've probably nominated yourself and or somebody else as a director. So
Yes.
that's an incorporation.
The
Separate to
fastest
that,
way to become a CEO.
right? You can incorporate today.
Mhm.
But separate to that, you might just be a sole proprietor. You might have a master business license, not
Mhm.
necessarily incorporated, or you might have a professional license. You might have a law license. You might be a registered massage therapist, and that license is the license that allows you to work
Professional
as a
corporation.
self-employed
Yeah.
person. Correct. So,
Yes.
but yeah, the way this works in terms of taxation, and I want to be clear here, I'm not a tax expert, but as it relates to me and my clients, is your company makes gross income, right? If some of that income is pushed to you, then that income tax burden is pushed onto the individual, right? So let's say you pay yourself 50 grand. Well, okay, now you're sort of paying yourself, you're paying the income tax from that. But inside the corporation, and the reason that people incorporate is because corporate income tax is at a much more favorable rate than personal income tax. So if you've got 200 grand sitting somewhere, you're probably better off having that sit inside your corporation and pay 12 to 13% tax than it flow through to you and you pay 50% tax
Yes.
on the personal level.
Crazy,
Yeah,
crazy.
based on the clients. So you mentioned you work with mainly self-employed clients. How do you see the importance of the financial literacy? Because Dr. Kalina and I, we work with many solopreneurs and who have a great professional expertise. It happens that both of us, we come from corporate and from finance, and we have, I think, a fair level of a finance literacy. We don't see that with all the people who have a strong professional expertise. And then when they go into the entrepreneurship journey, that finance literacy become somehow dependent on external consultants. So how do you see that? And does it play really a role? Is it becoming a necessity?
Yeah, so look, I see the full spectrum of different types of entrepreneurs. Some of them who are very meticulous with their own bookkeeping and accounting, and some of which just sort of throw
Have a
all of their money in an
shoebox.
account.
Yeah.
Sorry, they just throw all of their money in an account, and then they hope at the end of the year that they make more money than they have to pay out in expenses, right? And I'm sure that in the industries that you've been in, you've probably seen this. And when it comes to meeting these clients, the people I just closed on a $3 million purchase for a gentleman in Toronto who kept his books well, who really ran he ran a manufacturing business, and he really understood every dollar that went in and out of his business and into his personal name. At the same time, I'm helping a general contractor who does $500,000 in revenue in the year, but is having major issues with tracking his income and expenses. So often when we meet people and they're in the early stages of inquiring about mortgages, we sometimes have to give them some coaching as to how to start setting up separate accounts and moving money around and actually spending an extra hour per month on looking at your bank accounts, so that by the time you come to me 12 months from now, in order to get funded for a mortgage, we have put in place the documentation and history that the bank is going to want to see.
Yeah, that is so true. So true. And you know what? When we speak of that top line of that 500,000 for ease of math, right? That top revenue line, how we said that all the different types of, business ownership, it means completely different. Like a $500,000 revenue for a SME that has payroll, that has expenses, that
Very different.
is really what drops to your EBITDA, right? What drops to your
The
bottom
bottom
line.
line, yeah.
20%, if lucky, right? Like 25%, opposite to a digital nomad that may make $500,000 and take home $400,000,
Yes,
right?
yes.
So I am shocked that banks do not see that difference, right?
Well,
Is
I will
what
say
do
that,
we really look at?
yeah, I 100% get where you're coming from. And I will say that in the world of mortgage brokering, we work with major banks but there are three levels of lenders. So
Yes, let's go
for
over those.
simplicity, let's just call them A, B, and C. Okay.
Okay.
And the further down we go, the more flexible things get, but that
Yeah.
always comes with an offset because they're taking on more risk.
It's more
with slight-
expensive.
with
Yeah.
more expense in terms of interest rates and or fees.
Okay.
So it really often comes down to me explaining this to clients in that if you want to end up with what we call A lending, then we're going to have to run your books a certain way. Sometimes that might mean declaring more income and therefore paying more income tax to the CRA. And that's option one. Option two might be, well, let's exercise your right as an entrepreneur to write off as many expenses as possible, but understand that closes the door to A category lending. And we then go and explore B or C type lending. And sometimes, even though the interest rate is elevated and there are fees associated, let's say for simplicity that those fees might be, or those extra costs might be $10,000, but because you chose to write off your expenses, you paid about $50,000 less in income tax. Then it's just a business decision. Which of these two expenditures am I willing to outlay? Is it 50 grand to the CRA, or is it 10 grand in extra lending cost because of the way I structure my finance? And this is where we get really deep into each individual situation. Sometimes I'll push them to A, and sometimes I'll say there's no point in pushing to A, let's stay with B.
Yeah. Interesting.
Interesting.
Now, in Canada, right? We are Canadian based, all three of us, funny enough. But our audience is worldwide, and a lot of our mentor experts are our cousins to the south. So in Canada, banks are crown corporations, the main banks, right? So my question is, are all banks A lenders? Like if we look at, and we're not speaking badly or good of any bank, nor are we sponsored by any bank. But if we look at a bank like Bank of Hong Kong, right? Is that an A lender compared to a TD Bank or a CIBC bank in Canada?
So yeah, again, to simplify, we would categorize A lenders as those which offer the best rates and have fairly difficult guidelines for qualifying. Okay, so worldwide, you'll know the difference between A, B, and C based on the pricing of their products and how difficult it is to qualify.
So an A lender is not necessarily a bank.
Yeah, correct. So if I use the example of, say, Canada, and this is true across the world, there are in the category A world, we have 6 major banks in Canada, but there's about another 30 A lenders, the names of which many people don't even know, but they often lend money cheaper than the banks, but they're just as difficult to qualify with. And there's a bit of a funny story and background here. So I'll give you an example. So let's say the three of us have money held with a major bank in Canada. Okay. Let's just call it the Green Bank for simplicity. Okay. All right. So we've got our money with the Green Bank, and together we're lucky enough to have $1 million on deposit at the Green Bank. Now, logic would say that if there's $1 million on deposit, then the Green Bank can lend $1 million in mortgages. That's what makes sense. But what is actually true is that we operate under a system called fractional reserve lending, which means that they can lend out, in the case of Canada, up to 10 times the number, the dollars they have on deposit. So $1 million on deposit means they can lend 10 million. Okay. Now let's just say that the Green Bank, through their front door, can lend $6 million to their existing customer base. Mm-hmm. They have $4 million of residual lending capacity, but they can't sell it to their existing customer base. So what they do is they basically package this ability and they push it over to a different brand who will then push that money into the market, sometimes at cheaper rate than the Green Bank themselves can do it.
And by different brand, you mean non-bank A lenders?
Correct. Of which there are dozens. And the simpler way to look at this is if you think of the major supermarket and the discount supermarket, they sell the same thing. The box, the stuff in the
Under a
box is the
sub
same,
brand.
right?
Yeah.
But it's just a different brand, right? So the
Wow.
money kind of works the same way.
Brilliant. Brilliant. Now, back to the executive mobility, right? I'm sorry, Yusuf, did you have any thoughts or questions before we move on?
I think you are going there.
Okay. So executive mobility wise, right? Which actually I'm thinking of it from a two-prong concern per se. One is when an employee, a C-suite or a regular T4 individual opts out and then becomes self-employed, right?
Yeah.
So technically they're a startup, but they're really not a startup. Somebody that brings in 25 years of experience to the consulting world is not a startup, right? Is that a consideration that is given? Because I know you have to be in business for a certain amount of time before, even if you have stellar performance, it still needs to be, is a matrix of time over performance, not just time and not just performance, right? And then the second is if your executive mobility is actually to other countries, to and from, right? Does dealing with a global bank like a green bank,
Right.
um, does it make it easier to have that executive mobility since you've established history with that bank?
Okay, these are good questions. So, to the first part of the question, a 25-year veteran C-suite person goes out and becomes a self-employed consultant. You would hope that that 25 years counts for something, and then if historically they made 300 grand a year, that the bank would recognize that he's probably going to make 300 grand a year in his first year as a self-employed person. Unfortunately, logic doesn't win in the world of finance in many cases, right? The guideline, the fairly strict guideline, is that lenders want to see 2 years of audited financials and tax returns,
Audited.
so that they can see a trend.
Wow.
Okay,
Yes.
and what that means is, let's just say
Audited or third party?
so when I say audited, I mean back from the CRA, right? The
Yeah.
CRA
Oh, the
would have
NOA, yes, the
correct.
notice of assessment for
Correct. So let's say this
foreign friends.
person goes out and makes $400,000 a year as a consultant. That's great. But the banks, and this is, I can understand the bank side of the coin here, which is the banks don't know how much of that 400 this person will choose to write off as expense this year. They could choose to write off 350. And so whereas last year his T4 showed 300 and this year his gross was 400, he's actually only going to show 50 this year. And that's what they're looking for. They're waiting to see how this person files their taxes, and then they will determine how they will, be able to lend to that person. So that's that question. Now, as it relates to working internationally, so I will tell you that this is where things get very tricky and sticky. Right now, I'm helping multiple Canadians who are currently living in United Arab Emirates, Australia, America, and South America. So these are clients who consult with us, and it depends on how and where they declare their tax. Okay. So you could be working internationally, but if you are filing your Canadian tax returns and you have your Canadian notice of assessments, then I can use that income. That's workable, that's doable, and that's fine. It's when you are working in the United States and you only show, say, W-2 income in the United States, or you declare your income tax only in the United States. That's when things get a little bit more complicated. That's where down payments might be increased from a minimum down of, say, 5 or 20% all the way up to, say, 35% down. So it really does depend on a couple of factors there.
Yeah, I want just to add to that because you mentioned working with clients internationally, and earlier you mentioned coaching clients. And when we talk about executive mobility, there is big part of the mindset that comes with it. What I've seen in my coaching is really the challenge to shift from an employee mindset to an entrepreneur mindset, and the financial consequences that come with that, especially because also we have to admit that the financial systems are built around the traditional career
It's true.
career framework. So from your experience working with your clients and coaching your clients, what are the early financial habits that people who are transitioning or
Mm.
pivoting
Oh, good question.
would need to develop early on to start on a solid ground?
Yeah,
Very, very good
very good
question.
question.
So I'm going to answer this in a couple of parts, and I'll use some real examples. So in the last year, I helped a gentleman who was a project manager for a construction company, where he was making about $180,000 a year, so very healthy income. He was going to be starting his own business in the next year or so. He made it clear to me that these were his plans. And at the same time, I had helped him build a real estate investment portfolio of around 5 or 6 properties. And we were just trying to work out, okay, what is your future plan and what is happening here? And he said, well, Dion, my goal is to go and establish this business. We're going to need, access to credit, lines of credit and other things. And so for him, the strategic thing for him to do, Youssef, was for me to help him finance or refinance his existing assets before he left his job, because on paper he still looked super strong. Okay.
Yeah.
So the message for anybody who is considering becoming an entrepreneur is, before you take that leap, sit down and look at your asset base and look at whether or not, using your current position, you can maximize the lines of credit and credit facilities that might be available to you. So before you make that jump, be very strategic and recognize that if you make that jump tomorrow, for the next 2 years, you're going to be in this desert, the
Yeah,
credit desert.
building history.
Yeah.
Yeah.
Correct. Until you
Wow.
can get that history, and we know he's going to be a millionaire. We know that, but the banks don't know that for a
Yeah.
couple of years from now, right?
Yeah,
Wow.
following up on that, for our listeners who are starting a new business, so what are the common mistakes that you have seen so far that do not or are not really helping the starters to secure financing?
Yeah. Okay. So, okay. Well, first of all, big business, I guess, advice here is, cash flow is oxygen. If you don't have cash flow, you're
Literally and
dead,
figuratively.
right?
Yes.
Okay. A big mistake we see is people focus on top line and
Mhm.
they forget about bottom line, and they must watch what those expenses are going to be, right? People think, oh, I made $1,000 in revenue. What's your net? What are the expenses associated with that $1,000? Too many people, and I see this all online everywhere, just focus on top line. I don't care about my top line. I care about my bottom line. What is in my bank account that I can spend, right? And yeah, and keeping on top of expenses. People spend too freely, too early, without figuring out what is going to be the return. If I'm spending this dollar in my business, if I'm spending a dollar,
$5,000 on a website. Yeah.
whatever it might be, right?
Yeah.
If you're spending a dollar, how much return are you going to get in on that
That's
dollar?
right.
Sometimes you just need that dollar back. Sometimes you need 10 times that dollar back. But you need to know where that's going to come from. So that's a very high level in terms of business. And then as it relates to mortgages, it's making a decision as to what type of a lender you want to land with, based on the options available. That then reverse engineers how you might then file your income taxes. And again, an early conversation with a professional, a mortgage professional, will set you on the right path. And
Absolutely.
I'll
Oops,
say
sorry.
this too, that I speak to so many entrepreneurs who are just get sick and tired of banging their head up against the wall at a bank, trying to get a bank employee who's never been self-employed in their life to understand how their business works and how they make their income. And so
Yeah.
many clients come to me after trying 3 or 4 months at this bank and that bank, and we get them clear in a month. In a week or two. Probably every week I get this call, which is, Dion, I wish I'd met you last year or 3 years ago, because we'd be on a different path. So
Well, but
finding
now
that,
that you're one of our PwC mentor experts, that's going to change, because you're going to be guiding us through, and people will be connecting
Yes.
with you.
I'm super
We're at
excited to be serving
we're
this community. Yeah.
Thank you. Yes, we're at the top of our. I could continue. Um, so we will definitely have you back, of course,
Sure.
and of course for those that have many more questions, because I trust me, I was writing them down, and there was no way we were going to get to them all.
Okay. Yeah.
But we are definitely having Dion back on our sister brands and in conversations such as Powerful Women Today and Prime Living, because this again hinges on demographics, right?
Yes.
What is your profile look like if you're a single woman, if you are 55 plus, if you're so we'll definitely have Dion back, and you can check out Dion's articles in our magazines, check him out on our podcast, and he is one of our speakers at our September 12th event for Prime Living here in Markham, for those able to attend the GTA and in the 905. And I thank you so much, Dion. We're going to put your contact information, and this is just the beginning, because this
Absolutely.
is the new reality, and we're looking forward to more of your wisdom and knowledge. And Youssef, thank you always, darling. Good to see you, and until next time, everyone.
Thank you.
Thank you.